Hi everyone, thanks for watching this video. My name is Casey Lau. I'm a financial educator and author of several financial books, especially talking about money tips for Malaysians. So today I'm going to share with you this concept called value investing, because a lot of people is asking, right, when you have money, when you want to accumulate wealth, what kind of things you invest in. So generally I would say you want to acquire asset and then you want to do value investing, buying it at a low price. So how do we do that? So I'm going to show an example to you. How is it going to be done with a chart? So for example, you want to acquire something of value, so I'll call this axis value, and then according to time the value will change. So for example, just use stock as an example. So say stocks of a certain company, when the company is making money, you can do a valuation on that company. You can know that, how much the company is making, so how much is the stock worth. So generally what we call that is the intrinsic value of the stock. So for example, let's say a stock that is earning certain income consistently, so you can do a valuation on it. So let's say its value rises over time about the same like that, and then you know that this is a good asset that you want to buy. You keep making money, that kind of company, that kind of business, so you want to have a portion of it. So you can do it by buying the stocks, the shares at the stock market. So this is what we call the intrinsic value, right? Intrinsic value. I'm going to use another pen. So this is called the value, but the price, it keeps changing, because in the stock market, when people are pessimistic, they will price the stock low, so they will trade the stock at a low price. But if they're optimistic about the market, they will trade the stock at a higher price. So generally the price will be maybe something like that. Let's say it move like that, move like that, and then sometimes it's like that. So it depends on the market swing. So in this kind of situation, these represent the price. So this is the price that is transacted on the stock exchange. Okay, you can see the price and the values is in fact different. So what value investor do is we try to go in at the right price. When the price is low, then we buy it low. It's called value investing. We buy for the value. So if this is the value, then I'm going to show you. So for example, if the price fall anywhere around here, okay, this is actually the same line as the intrinsic value, but it's just a little bit lower. Maybe say you just put 30% lower. Right, so this line will be called the undervalue line. So that means whenever the price drop below this margin, we call, then this is called undervalue. Then you can buy anytime over here. You will sure to make money, right? And this portion, we call it a margin of safety. So if you try to Google for margin of safety, you will find some books. Actually, not some books, there's quite many books written about this thing called margin of safety, where it offers a safety, like a tolerance, where you buy the price of the stocks below this undervalue price, then you have a margin of safety. So it's very hard to lose money when you buy over here, right? Okay. And what happened? You can also like draw something over here. Also mirror the graph. Exactly the same line, but it's just maybe 30% higher. Right. So in this case, the blue line, this is overvalue. Overvalue. This is called undervalue. So when it's overvalued, normally you will want to initiate a sell. So if you can sell anywhere over here, you will sure make money, right? and you wait for the price to come down again. So this is how you do value investing. This is what famously known as. This is what famously known as value investing. So whether it is stocks or it can be a property, so property's price also sometimes it fluctuate, but it's not as much as stocks, and also some other kind of assets. So the key here is you have to know how to do the valuation. You have to know this line, like the intrinsic value of the asset you're trying to acquire. And so when you identify good asset and then you know how to value it, when you know how to value something, an asset, then you kind of like know what kind of price point you should go in. So always just buy at a low price, and then when the price is extremely high, then you can sell it to make a profit. So this is how you do value investing. Very simple, right? So if you want to get more money tips, just download my ebooks, which is free. You can get it on my website kclau.com. So I'll see you there. Thanks for watching.